If you're looking for things that you feel confident in buying in a market pullback like this, you might start looking at the same companies that the insiders are buying.
Solid insights on where investors can turn for growth and stability in this market slide.
Whether the economy is up, down, flat, people have health needs. They're going to get themselves treated.
Alexander Green with the Oxford Club shares his own take on this market downturn and one small stock he's watching for continued growth.
The company, I think, has got a great future ahead of it. It's got a market cap of just $3 billion, but it could be much, much bigger if it gets that FDA approval.
Plus, he shares a preview of his new best-selling book, The American Dream, and why he says it's needed now more than ever. Alex, so great to have you on the show today at kind of a rough time in the market. A lot of retail investors out there are really hurting today and all of this week so far. What advice do you have for retail investors when we get into these kind of seasons of red in the market?
The drawdown is really not that significant. I mean, it's just last Wednesday, the Dow hit an all-time high. The market had a choppy few sessions here. What's changed is, number one, investors are a little more skeptical about some of the valuations in the tech sector, especially with the AI-related trades. They're wondering with these sort of lofty valuations whether the near-term earnings can support these share prices. And so there's a little skepticism on that front. The other thing that really is bothering investors right now is you have a situation where inflation is a little bit higher and hiring is a little bit softer. And so there's a little more doubt about whether the Federal Reserve will cut interest rates 1/4 point in December, which the markets were thinking was just a given a couple of weeks ago. And now they're saying there might be a pause since the Fed makes a fetish of telling investors that their moves are always data dependent. They're worried that the data might show that the Fed can hold off. So that's what's caused the sell-off in the market recently.
All of these economic factors are different elements that you talk about in your new best-selling book, The American Dream. We are going to get to that book and a little bit of what you talk about in it a little bit later on in this interview. But first, I want to focus on some practical advice for investors. I think you already touched on a really good one, and that's that the market is just down a little bit. What advice do you have for kind of keeping your cool in a market downturn? One of the biggest questions we get from retail investors is, should I sell off now before an even bigger sell-off happens in the market and I lose even more? Should I hold? Should I buy this dip? Is this a really short temporary dip? That whole timing the market discussion. What are your thoughts on that?
Well, I'm not a market timer. I always tell my readers that I'm a long-term optimist. You can look at a long-term chart of the market. You see that the line goes up and to the right. In the short term, I'm always neutral because you don't know what the market's going to do next week or next month. However, the trend is bullish over the longer term. So if you're a trader, you might want to sit out a little bit and see that the primary trend is still with us. And be a little more careful. If you're a longer-term investor, then you can use every sell-off as some kind of an opportunity to buy good quality stocks at better prices. So if you're a long-term investor, you can shake this off because 5 years from now, it won't matter what the market does this week or this month, just like it didn't matter 5 years ago what the market did that week or that month. And people lose sight of that sometimes. They get a little concerned about the real-time drop in their share prices. But I remain optimistic over the longer term, and I'm still finding good bargains in this market.
Yeah, absolutely. And different sectors, I would assume, might be better than others when you see this kind of a drop too. So we're going to get into that in just a minute. I do want to talk just a little bit more about what it would take in the economy or what it would take before you would feel like, okay, this is a true downturn, that this drop is going to continue. Are there different indicators or signs that you look for that we might be going more towards a bear market than the kind of bull run and high expectations that we've seen?
Well, the first sign would be if the market broke its 50-day and 200-day moving averages. That would mean there's a technical breakdown, which often indicates that there's going to be more pain ahead. But I can't emphasize enough that no matter which signal you look at, it's not going to tell you what the market's going to do next. I mean, Warren Buffett famously said he gave up on technical analysis when he turned the chart upside down and he still got the same answer. You really just can't know those things. You have to be comfortable with uncertainty to a great extent. But what you can do, let me give you a perfect example. Insiders, the officers and directors that run a company, they have access to all sorts of material, non-public information about the companies that they run. And that's why the government requires them to file what's called a Form 4 with the SEC detailing how many shares they bought on what date at what price to at least level the playing field. And so if you're looking for things that you feel confident in buying in a market pullback like this, you might start looking at the same companies that the insiders are buying, because they are the ones who not only know what's happening from a macro standpoint, not only know what's happening in their industry, but are very well informed about the prospects for their business. And so if they're buying, not that they're infallible, but they have an unfair advantage. And so you might be buying some of those stocks that the insiders are buying.
Yeah, that's a really great metric to look at. Not only what insiders are buying, but also what they're selling right now. We have a premium report out on the 12 stocks corporate insiders are dropping right now. You can scan the QR code or click the link in the description of this video to continue your own research on stocks that have some major moves by corporate insiders right now. Again, a reminder, our channel is just about education and stock ideas. This is not financial advice. The goal is really for you to gain some insights and then turn around and do your own research on these stocks so you can make your own decisions about what to do with your investments. Alex, I know you are in the market every day. You are writing to your subscribers at the Oxford Club all the time. And one area that you're looking at is biotech. Let's talk a little bit about why that's a good place to look during a season like this.
Well, biotechnology is being enhanced in all sorts of new ways through artificial intelligence. Like, for instance, drug discovery is happening much quicker. It costs $2.5 billion to bring a new drug to market in up to 10 years. And so to the extent that they can use AI to shorten that time frame or have success sooner, it will save drug companies billions of dollars. That's an exciting part of biotech. I will throw one particular name out there that I think is really attractive in today's market. That's a company called Grail, symbols GRAL. And it's a company was spun off from Illumina a few years ago. And its mission was to be able to detect over 50 different types of cancer with a simple blood draw. And they've been amazingly successful. It's called the Gallery test. You can actually order it online. I've taken it for $950. They send you a couple of vials. You go to a local blood draw center like Quest. They draw the blood, they send it off, and you get a report back. And it's a good feeling to know you've tested negative for over 50 different types of cancer, especially types of cancer like pancreatic cancer, which a diagnosis there is a virtual death sentence because people only live weeks. It's not detectable until stage 4. When people go in their doctor's office. But here they can catch as early as stage 1. And for those people who say, well, I wouldn't want to know. No, you would want to know, because the earlier catch cancer, the more successful the treatments are. And so it's this test, the Gallery test by Grail, is already been fast-tracked for FDA approval. My guess is it will soon be a routine part of everybody's physical when they're 50 years or older. So the company, I think, has got a great future ahead of it. It's got a market cap of just $3 billion, but it could be much, much bigger if it gets that FDA approval, and then insurance companies and Medicare start covering the test. It will be a huge win for the company.
It's a really interesting company to look at in a time where there's so many questions about where's the market turning, what's happening in the economy. Well, your health, and especially when it comes to detrimental diseases like cancer, it's always going to be forefront. It's always going to be a priority for where people are investing their dollars. So this is a very interesting company to look at no matter what's happening in the market. Before we move on to talking about the American dream a little bit, when it comes to biotech companies, even a company like Grail that has so much promise in the future, what are some maybe risks that investors should be aware about when it comes specifically to biotechs?
Well, with biotechs, the big risk, of course, is that most drugs that enter clinical trials don't succeed. They wash out in the first, second, or third phase, and so it's a bit of a crapshoot. And even drugs that look promising coming out of phase 2 don't often make it in phase 3. So it is a risky area. I think the exciting part is you have a lot of big pharma companies like Merck and Pfizer and Bristol Myers that they have patents that are expiring on their existing legacy drugs, and they need to buy some of these smaller companies. I think we just saw a big announcement yesterday. Johnson & Johnson bought a private company that had success with a company that treats prostate cancer. And they didn't have approval of the drug, but they think the outlook is so positive in clinical trials that they're willing to invest a few $1 billion to see if they can capitalize on that. So that's the risk. But then, Bridget, the thing that's positive is, as you mentioned, healthcare is the ultimate recession-proof industry. because whether the economy is up, down, flat, people have health needs. They're going to get themselves treated. And so it doesn't matter if we're in an expansion or recession or what have you, these healthcare companies are going to continue to prosper. So that's a good place for someone who's a little wary about the current volatility in the market to look. Healthcare stocks and biotech stocks and food companies, utilities, consumer products, and so on that are consumer staples that are resistant. People buy toothpaste and detergent and things like that, no matter what the economy is doing. So there are lots of areas you can look that are not as risky as buying AI companies and data centers and all the high-flying chip stocks that have made such a big move. And I'm not saying that those are not going to be good investments, but they are expensive stocks and they are volatile stocks. So if you're going to buy them, be prepared for a turbulent ride because that's just the nature of the beast.
Yeah, well, you already hinted toward the next area I want to go in this conversation, and that's talking about the economy. You have a brand new book out right now called The American Dream. It's one of the best-selling books out there right now. There's an Amazon link. We've got that QR code up and a link in the description if you want to read the full book. But we're going to give you a little preview here right now about talking about the American dream and whether or not that is still possible. And I think, Alex, that's really come into question a lot by a lot of Americans recently.
The reason I wrote the book is a year ago, I can still remember, I was sitting on my brother-in-law's porch reading the Wall Street Journal, and I read the polls that showed 2/3 of Americans no longer believe that it's possible to attain the American dream. And I was astonished by that. I mean, it's part of our national identity. No other country is known as the land of opportunity, and no one talks about the Chinese dream or the French dream. It's the American dream, and the idea that 2/3 of Americans didn't believe it seemed astonishing to me, and the book is sort of my optimistic counter-argument, and I'm surprised that now the book's come out, the numbers have gotten even worse. 70% of Americans no longer believe in the American dream. And now let's stop and talk about what the American dream is. The traditional view is that everyone has an opportunity to rise as far as their talents and ambition and persistence will take them. That's actually viewed as a microaggression on some college campuses today. The more contemporary view of the American dream is I can afford to buy a home, raise a family, live well, and retire comfortably. So it's not a high bar to cross. And yet, 7 out of 10 Americans don't believe it's possible. And the most pessimistic people of all are young people. And I start out in the book, first of all, mentioning that the biggest inequality in most people's lives is what they're worth when they're older and what they're worth when they're younger. Your income will rise over time. If you invest, your investments will rise over time. And so the problem solves itself to a certain extent. But one of the great issues in today's world is people don't realize that we are living in the most meritocratic nation on earth at the best time in history to be alive. And that seems like sort of a provocative statement. So let me just say that people are living longer than ever. Standards of living have never been higher than they are today. Violence, despite what you see on TV, is in a long-term cycle of decline. Educational attainment's never been higher. There's more people with high school degrees and college diplomas and postgraduate degrees. Air and water quality have been improving for decades. Household income and net worth is at all-time record highs in the U.S., just like the stock market is near an all-time record high. So in many ways, it's never been better to be an American. And I can assure you, there's never been a better time to be an investor because investment minimums have never been lower. It's $1 at some brokerage firms and mutual fund companies. Commissions have never been lower. There's zero at most discount brokerage firms now. Management fees have never been lower. Spreads have never been tighter on stocks. Information's never been more widely available. It's never been easier to monitor your portfolio. Executions have never been faster. And so when I hear the little guy just doesn't stand a chance, it's so wrong. And so I wrote the book to really remind people that of the virtues of capitalism and American exceptionalism and what I call taking radical responsibility for your choices. If you're willing to accept that whatever situation you're in your life, you got yourself there and you can get yourself out, and to look at it, and this is the key, as an enjoyable challenge, not like, oh, well, I've got bills and I've got debt and I've got all kinds of bad situations. And I'm not saying that those things aren't true. I was flat broke as a young man in my 20s. I had no great skills, no network, no connections, no great prospects, but I did have an unshakable faith that somehow, some way, I would achieve the American dream, and I have, and I'm very much interested in sharing my thoughts on the subject with others because I didn't come from great circumstances. I'm not an exceptional person, and yet the way that I've grown my wealth, in an industry in money management 40 years ago. It allowed me to earn a high income and then compound that wealth. But there are lots of ways that Americans can work, save, invest, and compound, and therefore have the choices, have the financial wherewithal to live the life of their dreams.
That's a very positive message and a positive outlook on a day and a week when I think investors need to hear a little optimism in that American dream and the future of their finances. I love that you touched on it's a perfect time for investors to really embrace that American dream. I know we recently had a comment on our channel from one of our viewers saying after being able to 3x in 1 year, he's really excited to see what the next 15 years could bring with so much success he's had. Is an outlook like that really a part of the American dream? Is learning how to invest whatever income you earn as a part of your American dream really a big part of making that come to fruition?
It's very true. I often say if someone gets to the age that they would like to retire and they can't retire comfortably, if they haven't accumulated wealth, then one of these things has happened. Either they haven't worked or they weren't able to work, which isn't the case in some instances, but they either haven't worked or they worked, but they didn't live within their means, so they couldn't save, or they saved, but they didn't invest, or they invested, but they didn't do it successfully, or they invested successfully, but they weren't able to keep their hands off the money as it compounded in value. And so it really is up to the individual if you're willing to work. And there are a record number of millionaires in the United States these days, and they have followed a remarkably similar path. They didn't found a software company in their garage or play third base for the Yankees. They just worked and saved and invested and compounded, often for decades. And this doesn't mean you have to live like a miser. If someone, to give an example, Bridget, if someone is 25 years old and they put $190 a month into an S&P 500 index fund, and they earn no higher return than the S&P 500 is given for the last 75 years, they would have, at the end of 40 years, when they turn 65, $1 million. And if they invested that money in a Roth IRA, they'd have $1 million tax-free. And they could have spent everything else. They could have eaten out. They could have taken vacations. They could have bought nice cars if they would just save $190 a month. Now, there is a small percentage of Americans that even saving that much was too much, but certainly the vast majority of them can do it. But they don't know, they don't have the knowledge, they don't have the optimism. And I really meant this book as a big shot of adrenaline. People tell me it's the most optimistic book they've ever read, but I do think it's very possible for people, especially young people who've got this long runway ahead of them, to live their dreams and have a balance where they can afford to own a home, raise kids, take trips, and not live like a monk, but just to save regularly and keep their hands off that money. And then time and compounding will do all the rest of the heavy lifting.
Yeah, I still hear a lot of optimism in that. I love to hear that the book is a really optimistic read. And I think a lot of viewers out there need that right now. I think a lot of investors need that. Maybe they want it for their kids or their grandkids. I know we have a lot of younger viewers on here too. And I do want to address some of that potential naysayers out there who say, yeah, but look at the housing prices and how much they've increased. Look at how much housing prices and inflation has increased, and salaries and wages have not kept pace. Different economic factors like that
Right.
are facts right now. Those are a little bit gloomy statistics to look at, especially for that younger generation. So what are your thoughts on some of those, the real economic issues out there?
Those hardships are real. Mortgage rates have doubled approximately in the last few years. Housing prices are up maybe 50% since the pandemic, and you have a lot of baby boomers and others who are not moving out of their homes because since they would have to get a higher interest rate mortgage, they'd rather just stay where they are. And so you've got a shortage of housing, higher interest rates. It's kind of like a perfect storm in the housing market, and that's why the recent average age for people buying a first house has spiked to 40. However, you have to realize there are alternatives available. For instance, you don't have to have a big down payment to buy a house, or even good credit, or all the things that people tell you need to get started. For instance, I tell a story in my book. I bought my first two houses with no money down, and the reason you can do that is you can assume a mortgage. It's called a contract for deed. If you can find what's called a don't wanter, which is someone who's really anxious to get out of their house. If they bought another house, they can't afford to make 2 payments, or they're moving out of state or out of the country, and they really need to unload the house. They will often say, either give me a very small down payment or no down payment, just take over the payments. And if the mortgage was taken out a few years ago, it might be a 3 or 3.5% mortgage versus a 6.5 or 7% mortgage. And by doing that, I'm not saying you can necessarily buy the perfect house in the perfect neighborhood that way. You probably can't, but can you buy some house in some neighborhood and get on the property ladder and start building equity? You can. And I talk about those ways in the book. And I think it's important for people to understand, when I bought my first house with no money down, my friends laughed at me. You're going to have to put up a big down payment to satisfy the bank. You're going to have to pay your real estate commission, whatever. I didn't go to the bank. I didn't qualify the loan. I couldn't have qualified for the loan. I hadn't been working long enough. I didn't have to put up a big down payment because I got the seller to let me just make the payments to him, and he made the payments to the bank. I know it's possible to do that, and people who feel frustrated because they can't buy a house the traditional way, if they think outside of the box a little bit, they will find that they can buy a house, not the perfect house necessarily, but a house that's suitable. And there's not a lot of competition out there because most people don't realize that the options are available to them.
I love this. Specific strategies to think outside of the box with finances and building your own American dream. It doesn't have to look the same for everyone. It can look different, and you present some alternatives in your book. Again, if you want to read that full book, The American Dream, we have a QR code here and a link in the description for you to check out that book on Amazon. Again, it's been one of the best sellers since it launched, and you just launched really recently, right, Alex?
It came out a week ago, and as I was telling you before we got started, the publisher Wiley said the entire first printing sold out in 3 days. And so now the Oxford Club, where I work, is making the books that it had ordered and reserved available for the general public so that it doesn't just say the book is sold out on Amazon. I tell you, I've gotten a lot of positive feedback from the people who've read it, but the number one piece of feedback I get is, oh my gosh, I have to have my kids and grandkids read this book. They are so bummed out. They feel stuck. They don't know what to do. They're so pessimistic. They're down on the state of the nation. They're down on the economy. They're down on their future prospects. And it really, the book is like a shot of adrenaline to these people because it makes them realize part of the problem is the way they're looking at their situation. And I'm not saying that their situation isn't bad. In some cases, it really is bad. They need to make certain changes. But if they look at it like a reality show, I mean, people love to watch people put in a tough situation, and they've got to use all their wiles and all their resourcefulness to get out of it. If you look at your own life that way and say, you know, I don't have enough income, I've got too much debt, I've got too high expenses, how do I get out of this? And actually embrace it as an enjoyable challenge, they can actually enjoy the process. And the interesting thing is, in writing this book, I found that the wealthy people that I spoke to, it wasn't the fact that they had this high net worth and the ability to spend their time and money the way they wanted to that they enjoyed the most. It was a feeling of earned success. They came from nothing or very little and made a success of their lives. And it's the trip, it's the journey that becomes the most enjoyable part. And when you get there, you look back, and it's almost like watching a movie or reading a novel where, you know, the character starts off up in a tree with people throwing rocks at him, and they end up, in the house on the top of the hill. So it is possible, and I think it's a shame that in a country that offers as much opportunity as ours, that more people don't realize it. And that was my reason for writing the book.
Very good. That feeling of success and accomplishment is definitely a part of the American dream. Sounds like a very good read for sure, and no doubt part of the reason why it is such a good bestseller right now. Thank you again, Alex, for the great conversation on the American dream, but also breaking down what's happening in the market right now and some great specific advice for investors to consider in this kind of market downturn we're seeing this week. Thanks again for your time, Alex.
Happy to be here, Bridget. Thanks so much for having me.
Well, thank you for watching, everyone. Let us know what you think in the comments. Is this perspective on the market downturn right now resonating with you? Is Alex's thoughts on the American dream something that also resonates? Let me know your thoughts in the comments. Thanks again for watching, everyone. As always, happy investing.